Good afternoon and welcome back to Moneycontrol live stream. You're watching the closing bell. I'm Santosh Nair.
And I'm Yatin Mota.
Benchmark indices made a strong recovery today. Across the board rebound seen. The Sensex and Nifty ended higher by about 1%, but the real star performers of the day were the mid and small cap shares. Now yesterday itself the small cap shares had rallied quite a bit from the day's lows, and today those gains were extended. In sectoral trends, auto, banks and metals were among the big gainers of the day, but within the sub segments you had PSU banks which saw a fantastic rally today. Remember, PSU banks were also the stocks which had taken quite a bit of knock over the last week, and today they did come back with a vengeance.
Absolutely, and we have snapped that 5-6 day losing streak, and with today's gains probably there is some relief for the bull camp. As Santosh was mentioning, PSU banks were one of the top gainers in the markets today, with PSU banks doing pretty well. The likes of Canara Bank, PNB after the earnings especially moved 6-7% intraday. If you look at the mid cap end of the markets, almost 1-1.5% up for the mid cap index, 2% higher for the small cap index, and most importantly, Santosh, the market breadth really turns positive. 5 advances for 1 decline. Would you call it a relief rally, or would you call it a show of strength for the bulls, that they are here to stay?
Well, there's reason to at least suspect that what we are seeing could be a relief rally unless the trend continues for the next few days. Market had been falling for about 6 sessions in a row, and as one of the stock market sayings go, trees don't grow to heaven and roots don't grow to hell. So very clearly at some point the fall had to be arrested. Interestingly, Yatin, now what possibly could decide the trend in the coming days is probably how some of the smart money moves, because clearly among retail investors there is they're just looking at the prices.
Correct.
There's a 4 to 5% correction, or maybe more in the case of small and mid caps. So they are looking at price, but a lot will depend on how the HNIs, family offices, they are looking at the situation, because already we have foreign funds which are selling quite heavily, and a lot of HNIs also more in a profit booking mode. So I think it's still very early to call for a reversal, I would say. Yatin, what is your take on it?
So I think Santo, I would partly agree with you. As always, I don't agree fully with you. But JP Morgan today upgraded India's stance, and they have added a couple of stocks. From earnings point of view, Santo, today 3 Nifty companies reported earnings: Dr. Reddy's, Cipla and Maruti. All 3 earnings were much above street expectations. So very strong earnings season. X the IT pack is what we have started to see. Obviously, big boy Reliance Industries reports its earnings at 5:30 p.m. or probably at 6 p.m. today. So I think that is one big number we need to watch out for, because a lot of things are really happening with their businesses, including retail and telecom. So I think the decisive factor would be as to how really do these 3 companies, which is Cipla, Dr. Reddy's and Maruti, take their conference call to the analyst community. What do they communicate in terms of the business prospects, and how does Reliance report its earnings would be probably the deciding factor, how really the market shapes up probably for next week.
Well, I'll also disagree with you on that note, Yatin, because see, I do accept that the numbers have been quite strong from all 3 major companies that you just mentioned. At the same time, how much is the market already factored it in? So one of the reasons the market had been rallying is that the second quarter numbers were expected to be strong. So I would say that to a large extent strong earnings have already been discounted, and the murmurs about expensive valuations, they've been doing the round for quite some time now. The global situation is quite fluid at this point in time, particularly in US markets where you're seeing a continued sell-off. So the general feeling on the street right now is that FI fund flows don't really matter, but in case domestic money flows remain weak, then probably even limited FI selling could probably have a multiplier effect. Well, and with that we move on to the stocks on our spotlight this afternoon, starting with Canara Bank. Now PSU banks in general were the toast of the market today. By toast I mean in the positive sense. Canara Bank was also one of the big gainers. However, Morgan Stanley is slightly bearish on the stock. It's rated the stock as an underweight. It's accepted the fact that there's been a significant improvement in asset quality. The second quarter numbers were better than market expectations, and the pre-provisioning operating profit was also about 8% above estimates. However, Morgan Stanley has said that at this point it prefers Bank of Baroda and Bank of India over Canara Bank.
Absolutely, and a lot of PSU banks have reported good earnings. Obviously, Morgan Stanley is underweight on Canara Bank, but still the stock managed to do well. If you look at the other bank which is on our focus today is PNB. Now, we have seen the stock of PNB really do well. Today also the stock was moving on good volumes. Now, when it comes to brokerages, today we had CLSA, which has been a fan of PNB earnings. They have a target of 80 rupees on the stock. They continue to like the stock because Q2 has been steady in terms of the overall performance. Deposit accretion remains a challenge for PNB, but still they have been able to maintain a healthy CASA ratio. As far as earnings estimates are concerned, CLSA believes that almost 0.4% return on asset is possible for the first half, and this should be maintained in the second half as well. And if you look at the pre-provisioning profits, CLSA has increased the earnings estimates by nearly 9% for the next financial year. So, yes, despite the fact that credit costs are moving up or probably cost of deposit will move up, I think brokerage are still really gung-ho specifically to the PSU banking space.
Well, Yatin, no doubt PNB has rallied by, has more than doubled, almost, it was about around 30 odd rupees in July 22, and from there it has moved out to about 80 rupees. So, finally, I think it's slowly shaking off the shadow of the Nirav Modi scam. The only thing is, for the long term investors, still there is very little relief. If you look at the prices in 2019, it's pretty much, it was even higher. So, still some way to go for PNB, I would say. And the last stock on my, well, sorry, Yatin, you wanted to say anything on that?
No. It's your last stock.
Last stock on my watch list today is Asian Paints. The company's reported its second quarter numbers yesterday, and analysts have been mixed, or rather more bearish views on the stock rather than bullish views. Morgan Stanley and Jefferies both are underweight on the stock. The only bull among major analysts at this point for Asian Paints appears to be HSBC. HSBC says that to some extent the weakness in the second quarter was because of uneven monsoons. However, it expects the volume recovery in the third quarter onwards, and also it's quite hopeful on the outlook for the remaining half of this year, both in terms of volume growth as well as margin expansion. Although, Yatin, for paint stocks in general, because of the renewed increase in crude prices, the sentiment seems to have turned slightly cautious.
Right.
And most importantly, the elephant in the room, which is Grasim's impending entry into the sector, that is something which I think at this point most analysts are very unsure about.
Yeah, and today morning I spoke to the management, Santo, with respect to the first point that you raised. Demand is slightly challenging given the fact that a lot of Indian households are down trading. So, the management said that instead of the premium category, the regular or the running category product sales were much higher, which supported the volume growth. So, it was not that they did well on the volume front. It was inferior product mix in the second quarter. Obviously, crude remains a challenge, but second quarter saw raw material decline of 6%. So, if the crude situation doesn't improve from here on, meaning the crude prices don't move up, probably there is some cushion for Asian Paints. But when it comes to the competition, the management has a very interesting take that a lot of players are still in the unorganized market for the paint business. So, the Grasim entry would probably mean better business for the entire organized market, and it will improve the overall pie. So, I think the management really doesn't feel threatened by the entry of Grasim, but yes, the street does, and probably you could see a day on which the markets rallied, the stock of Asian Paints was under pressure. But that's about Asian Paints. The last stock on my focus list is Shriram Transport Finance, which is now Shriram Finance. Now, they gave a very strong number. Today, the stock gained as much as 8% intraday. CLSA has an outperform rating on the stock with a target of 2050, and Shriram Finance has been quite cheap in terms of valuation versus other listed NBFCs, and probably brokerages feel that now is the time for the company to catch up. So, probably that catch up rally is right now happening in the stock.
Well, and with that we come to an end of this episode of Closing Bell. Thank you for watching.
And keep logging into Moneycontrol for all your business news and updates.